Hey everyone, it's time for some USMJ names, and we got a whole bunch. I'm not going to read them off. You can read them up at the top here. We got a lot to cover. Looks like about 15 or so. So we're going to start it off with some of the bigger names. We got GWPH, the Big Daddy, forming a nice equilibrium on the daily time frame after all-time highs. We got the high, the low of the pullback. Our lower high has clearly been set at 174.07, and the bulls are trying to form a higher low at 165.20. We need a little bit more follow-through on Monday to be confident that that is our higher low. Obviously, things are very tight at this point, and it's showing up as an inside bar on the weekly time frame. So it's been a very strong bull move. We had a bullish reaction to earnings, and now this is the consolidation following that. So as long as the S&P 500 keeps some strength, as again, if you look at the weekly time frame, clearly there is correlation with the S&P 500 as their lows were at the same time, and they saw a very similar 3-month bounce at the same time. But this is a very strong stock at this point, and even if we see a bear break from this pattern on the daily time frame, that just means a weekly higher low has to form compared to 140.44. So GWPH, definitely a lead bull in the sector among many lead bulls, but just the size of the market cap and the size of the company overall makes it, again, one of the original OG names in the USMJ space. IIPR is also coming off the all-time high on Thursday and a really nice response on Friday. And it's just a daily inside bar showing the tightening range. If we look at it on the hourly time frame, we established a base of support at 76.62, 76.59, a little double bottom there, and then a little bit of upside and recovery on Friday's trading day. So from here, we're either going to see a bull break of the daily inside bar and test the all-time high of $83, or we're going to see a bear break of the daily inside bar and look for a higher low to form compared to 66.55. But right now, the bulls have the advantage, and Friday was the highest close that we've ever had in the history of IIPR, coming off a bullish reaction to earnings, a bullish dividend announcement, increasing that dividend, and also looking very strong in the U.S. market. CURA has given us multiple red flags. So we got the initial red flag a few days ago. The bulls were able to shake it off a bit and try and see some continuation. And obviously, this is a big red flag of a candlestick. There are a few individual names that dumped at the end of the day on Friday. Look at the 5-minute time frame here. That's obviously huge volume and a huge dump down. So because it was a quad witching kind of day, there is potential that the end of the quarter had some funds maybe moving things around. And when you're looking at a name like CURA, the liquidity is just not there. So if somebody's trying to exit a sizable position at the end of the day, number one, you got to wonder, what are you doing waiting until the last 5 minutes? Because that is a terrible decision in terms of, trying to exit a large position with a lack of liquidity. But regardless, someone dumped a whole bunch of shares at the end of the day, and there wasn't any time left in the day in order to see how we can recover from that. So again, just the fact that we have 2 red flags in the last week of trading comparative to sector peers is concerning. The weekly time frame, we have our high, we have the low, we have our lower high, and we are still patiently waiting for the weekly higher low to form, and it does not look like we have formed that weekly higher low yet. Close at the low of the day. We'll see if we're heading down to test this low of 815. And if 815 breaks, we zoom back out to the weekly, and we would then be looking down at 730 as the next level. Clearly a new resistance level as well. Our daily lower high is now 960. Anything under that keeps the bears in control. GTII. So again, just compare these two names. And obviously we have a lot of names to be able to compare them with, but just the size of the bounce and then what happened on Friday and the size of the bounce and what happened on Friday. It's a completely different story. So we see the sizable bounce. We topped out at 1842. We traded sideways for a couple days. Bulls getting their bearings. 1744 is support. 1842 is resistance. And we closed at the high of the day on Friday. So we're going to be looking for a test of 1842 first thing on Monday. And if we break that level, then this bounce will see continuation. The weekly time frame for GTII is keeping the uptrend. We had a higher low at 1460, a higher low looking to be set now at 1575, and the bulls are going to try and see continuation to make their way back up towards 2018. Still a ways to go. That's about 10% from where we stand, so don't expect to just head right up to that level. But if we can get over 1842 early to start the week, that's going to give the bulls a lot of breathing room from where we bounced off of at the initiation of that bounce. IAN, nice sign of the volume. So a little bit of a slow start to this bounce, but increasing bull volume the last couple of days. We have that report put out. I forget the name of the company, Hedge Hedgeye, something like that. Hedgeye put out an account or a report that is covering IAN, GTII, I believe, and a handful of other names in the USMJ sector, and also covering the USMJ sector as a whole based on data, but probably having a little bit of something to do with these names getting a bit of attention. Close at the high of the day on Friday. We have 1742 as resistance, followed by 1748, and we're looking at the weekly time frame, likely to form a lower high. Size of the pullback was fairly sizable. We had 806 as the top and 651 as the bottom. So the amount of pullback that we did see in that 2-week span was, 18, 19%. So that's significant, and the odds of a weekly lower high compared to 806 are more likely than not. So there's the potential that we're going to get a tightening range here unless this increasing bull volume keeps up. That's the kind of scenario where we can see a significant recovery, but we're going to look for a lower high compared to 806 and then a higher low once that does form, but there's no sign that that has formed yet as the close at the high of the day did occur. A loss of the hourly uptrend is the indication that the daily lower high has been set and our last hourly higher low is 707. GGB, also big red flags. Big bear volume, closed down at the low of the day. Let's see if that dump was in the last 5 minutes, and it was. So clearly something's up with some of these USMJ names and exits by large positions. 220,000 when the total volume on the day. Wow, that's a lot. That's half of the day's total volume dumping in the last 5 minutes of trading. So again, if I had to guess, and it is completely speculation, it has to do with the quad witching and some large positions exiting before the quarter comes to a close. Perhaps some rebalancing. I mean, we've seen in the past with some of the Canadian side of things where we have the MJ sector ETF and there's rebalancing that goes on. So there's not that kind of an ETF for the USMJ sector yet. There will be, and we're patiently waiting for that. But something is going on with the dump before the quarter comes to an end. So we're now looking down at 443 as key support. If the bulls are going to change this trend, they have to hold 443 and then see a turnaround and break of 550. And the most curious thing that I'm going to be looking for is, does this bearish action on these names that dumped in the last 5 minutes of trading, does it continue on Monday? Because if we see weakness in those names comparative to their peers, that's going to tell us, okay, something's up. Whereas if we don't, then we can say, okay, yes, it looks like that was, a 5-minute event at the end of the quarter leading to a significant dump. So it's all about 443. The weekly time frame on GGB at this point is trying to, shift momentum, but obviously that's just sucking out all of the momentum that the bulls did have, and it looks like we're going to test 443 coming up. That's a potential play, though, off of 443 support. If that was just a 5-minute event and that downward pressure is not going to see continuation, then it's a play off of 443 support to look for a bounce, and we could see, a solid 5 to 10% bounce from the low of Friday if, again, we don't see that selling pressure continue. MRMD is tightening up. We have key support here that's just barely holding and key resistance of $4. So we essentially had the top of the bounce, higher low, couldn't break resistance, and now testing support again. So 368 is key support. If we break it, we're looking down at the low of 350, and key resistance is the high of the day, 385, and then up at $4 psychological. If we can't break $4, the bulls aren't going anywhere, so that's a must-break resistance level. Again, I'm just checking the 5-minute end of the day for all these USMJ names, nothing notable here, and weekly time frame for more clarity, just sideways trading. 3 weeks of sideways trading, and what I do like about MRMD is the fact that it is a tightening weekly pattern with the high at 580, the all-time high, low of the pullback down to 235, lower high at 533, and the bulls are attempting for this 350 level to be the higher low, but we have to break $4, and then we'll say, yes, that's our higher low, and we'll look for this weekly range to continue to tighten up into the middle of the year. But there's no indication that the higher low has been established just yet, and we might have to drop down into the lower $3 range to try and find that higher low. HARV still running strong on the news of the buyout in terms of becoming one of the major U.S. players in terms of market cap now, and we're right back at the all-time high. So a significant recovery. You can see the first 2 days of the gap up after the news didn't really have a whole lot of follow-through. There was some profit taking. There was some positioning back and forth, close at the low of the day on Tuesday, but then it was just all bulls after that on increasing bull volume. It's going to be all about 1120 early this week. If we break it, we're in blue sky breakout looking to 1150, and 12 psychological is the next resistance levels. And if we do not break that level, we're going to be looking at healthy consolidation to form a daily higher low. So just like that, this deal is thrusting Harv into the forefront of the narrative, or I should say of the conversation of who is going to be the major USMJ player. And it was very clear early on, at least in my opinion, that CGC was the lead MJ player early before all these stocks started going crazy. And we don't have that clarity in the USMJ space, probably because it's fractioned up. I should say it's just split up all across the country, and we don't have the same market environment. So it's going to be between IAN and HARV and TRUL and MedMen's in there, but we're going to get a whole lot of positioning and shifting around between these companies over the next year plus, and it's going to be fun to watch. It's almost like a horse race where, they're pulling in front of each other in terms of who's going to be the leader. Hourly uptrend is key. If we lose the hourly uptrend without breaking the all-time high, we're going to look for that daily higher low to form. So 1065 is a key support on Monday. OH. So OH is tightening up with 2 daily inside bars in a row and trying to get that all-time high here as well. They're right there. OH is definitely standing out for its strength on the chart. And if we look at it on the hourly time frame, we can see our high and low. Again, got to be cautious of that volatility. That's a 4% pullback in 2 hours. That's actually not that bad compared to what a lot of other individual names see. But we're right at that resistance. So you're either going to see a break of 1025 or 1012 first thing on Monday. Break at 1012 and we'll have an hourly equilibrium to be watching, and a break of 1025, and we're going to be looking up at that all-time high. A little bit extended on the daily, but again, this sideways consolidation is enough to give the bulls a breather and potentially see another leg up. And if we look at it on the weekly time frame, it's a beautiful, healthy weekly higher low and continuation move on increasing bull volume. And you can make the argument it's a cup and handle pattern. The percentage difference between the left side of the cup and the right side of the cup is a little high for me. But if we start the first 2 days, and again, I keep pointing out how volume is so key. And if you've been watching the daily MJ videos, there's been clues on names like CWeb and names like ACB due to their volume. So if we see volume the first 2 days, this is a high volume week of 2 million shares traded. If we see the volume in the first 2 days this coming week, perhaps the volume of the first 2 days gives us, 700,000 shares traded, and even go more than that. Let's go 850,000 shares traded in the first 2 trading days. That tells us that we are more likely than not going to see an increase in bull volume on this week. And if we're going to see an increase in bull volume on the weekly time frame, we're going to see a new all-time high. So the early indication will be, can we break these tightening daily inside bars bullish? And what is the volume going to look like behind that bull break? Because there is no resistance until $11, and then we're in blue sky breakout again. So always want to be watching these names that are approaching blue sky breakout, because as we know, you're getting your most bang for your buck in terms of risk to reward if you're in these blue sky names for their follow through. MedMen finally getting some bounce follow through after getting very tight. So we're now going to be looking at key resistance of 447. And anything under that is going to maintain a lower high on the weekly downtrend, keeping the bears in control. So we have a lower high at 506, lower high at 447, and we're watching that key 447 level. It is standing out to me to be a little bit of a descending wedge now that I'm looking at it, or I should say a falling wedge. So I just want to see what this looks like here. Haven't drawn these lines yet. So we could draw it that way. For our support line, we could go all the way back here. I don't really like that one as much. Well, actually, I do like that one as much. So what I just did is I drew the first line, and I saw the multiple touches, and I say, okay, we got more than 3 touches on this line. That means it's a valid trend line, but we didn't touch it here. And let's get rid of this line that I just drew. So the first line that I drew, all right, we got enough touches. It's valid. It's not really tightening up too much. There's a lot of space still within here. And this line, this most recent consolidation didn't touch it. So that's why I went and drew another line to see, can I get a better fit of what stands out? So I tried this one, and I initially looked and I put it on this anchor point, and I said, I don't really like that one as much either, but then I looked back and I saw this lower wick, and that lower wick bouncing right off that trend line means, okay, we have enough touches, 3+ touches, it's valid, and I do like this one a lot. This shows a bit of a descending triangle, but not clearly, because we do have an ascending support line. A descending triangle is when the horizontal support line is there, but it is seeing higher lows for the most part. So I like this. Just in terms of clarity, I would be watching this pattern on these trend lines, and we'll see if we form a lower high compared to 447. We're going to have to pull back and form a higher low, and then we'll see if we get a trend change eventually. This is a pattern worth watching. MedMen has been beat up pretty significantly comparative to everybody else in the sector, and once we get that shift in momentum, there could be some decent short-term gains, so you want to be watching this one. KSHB, I don't like the clarity on the daily time frame at all, so I zoom out to the weekly to try and find something that's a little bit better. We got the low of 437, high of 720, higher low of 499, lower high of 649, and now the bulls are trying to form another higher low to maintain in this tightening range with a higher low of 499. We're not convinced that this is our higher low yet. We need to break 586, the high of the week, in order to be convinced that the bounce has followed through enough that that is our higher low, and the range is going to continue to tighten. So on the daily chart, it's just one day of a bounce. That's why that candlestick's not convincing. Anything under 586 is a lower high on the daily. Bulls need to change the daily trend for us to be confident the weekly higher low has been set. And if I didn't have a position in KSHB, which I don't, I would be patiently waiting for this weekly time frame to get tighter and to give us a clear break before looking to make an entry. CVSI, double bottom on the earnings reaction, but not a whole lot of follow through on that bounce attempt. This is another one that I'm looking on the longer term patterns for clarity, and we have a weekly higher low attempting to form and not a lot of follow through. Last week was the bullish reversal candlestick that the bulls really wanted a follow through green week, and we didn't get it, obviously because of earnings. So we could trade within this earnings range, the pre-earnings range, and then the reaction for quite some time. And you can see we've already been within this pattern for over a month. So if we get a little bit of bull follow through, we're still going to look for a lower high compared to 515, and keep an eye on CVSI, but this is not one that has a break imminent. We're going to be waiting probably a week plus before we get a clear break from this range on CVSI. NBEV, watching the daily downtrend, very clear. When you have a downtrend like this, it's always very clear when it changes because it's just lower highs and lower lows. So the last lower high was set this week at 569, and we're looking down at support of 495, and the bulls have to hold 495 and break 569 to change this trend. We closed at the low of the day on Friday, so that's keeping the bearish momentum favoring the bears. And on the weekly time frame, this is another one that I'm going to be looking at a longer term pattern, and this is one on the monthly that is the clearest for me, because we have the all-time high, low of the pullback, lower high, and now we're looking for the monthly higher low to be set compared to 303. We need a weekly trend change to be confident the monthly higher low has been set, but more aggressive traders use the earlier signals. So the daily trend changing could be the first signal that the weekly trend is changing, but that's a higher risk and higher reward kind of entry. So if you're a more conservative trader, you're not going to act on that signal. If you're an aggressive trader, you're going to act on the daily trend change, you're going to put a stop in place, and you're going to hope that that is the higher low. So just to lay out what that scenario would be like, if we hold 495 and we turn around, the most aggressive trader is going to enter with a bottom fishing play on 495 support and will stop out if that level breaks. Less aggressive trader is going to wait for the daily trend change, enter on the bull break of 569, put their stop under 495, hoping that's our weekly higher low. And an even more conservative trader is going to wait for the weekly trend to change, which isn't going to happen anytime soon, because on the weekly time frame, any bounce under 779 is just a lower high. So that's 4 different scenarios in terms of how aggressive do you want to be, how much risk to reward do you want to be. And if I were to chart those out in terms of, it would go on time frames, which you're going to act on. If I'm going to act on the daily time frame, my risk is higher to be stopped out. My reward is bigger gains, bigger percentage gains if it follows through. But the percentage chance that it is going to follow through is lower. Whereas if I wait for the daily trend change, or I wait for the weekly trend change, the percentage odds that that weekly higher low is going to be set will be higher, but the percentage gains on the follow through is going to be lower. So it's a constant inverse correlation between percentage of being right and percentage of gains. The more sure that we're going to be right, the more gains we have to give up to let that pattern or play develop out. CWeb, so we had the signal on CWeb, and it was on Tuesday that it stood out to us, and it got nothing but follow through straight up to the all-time high, but the bulls ran out of momentum on Friday, unable to break that level. We got a double top essentially at the all-time high. That's not a significant red flag at this point. The hourly chart still hasn't really lost the uptrend as far as I'm concerned. Anything above 2087 keeps the uptrend intact. If we can hold 2087, then the uptrend's intact. If we hold 2087, can't break 2275, and then drop to a lower low, we lose the daily uptrend, and that tells us that we need to see some weekly consolidation. So we do have to be cautious of this double top, but healthy daily higher low is what's going to be anticipated, and we'll look for that higher low to form sometime early this coming week. Definitely want to keep it on watch, as blue sky bulls are the best kind of bulls. CNNX, big time bull move. This is one that I have not covered before, but it's worth watching, not to get in now because it's too late at this point. We just ran 70% in 5 days, so that's certainly catching some attention, but the volume's also very low. And we look at some of this, let's see, average volume in the last 20 days, we're talking 500,000 roughly traded to $500,000 traded a day. So that's a low amount compared to the vast majority of tickers to be watching. But it is a clear bull break, and we're heading towards all-time highs, and this is a low cap runner, very high risk, high reward. A little bit of money goes a long way for moving this one, and if we can get a daily higher low before the all-time high of 193, I would anticipate there's going to be some bulls looking to jump in and hope for that all-time high follow-through later in a week or two or so. But there's still no sign of slowdown. The bulls are in complete control and trying to see continuation. First support is 171. Then we're looking at 169, and then a lack of support below 169. So we'll see if the bulls make their way to that all-time high. Again, too extended. You know, it could run to $2 plus, absolutely. But the risk to reward just would not be worth an entry for me at this point, having already run 70% in 5 days. TILT, another one that we haven't really been covering. Daily time frame is still weak, but we're looking for a weekly higher low to form. We have the all-time low and the all-time high, and we're looking for the higher low. And we can look back at some historical examples of names that don't have a ton of price history. And let's see. That's not a good one. I'm trying to think off the top of my head who I was thinking of in terms of the setup that I am looking at. And I believe it's CWeb. Either way, this is what I'd be looking at. The all-time low, all-time high, and then the higher low that formed on CWeb was a great entry. So looking at TILT, we're looking for the weekly higher low to be established. And we need to see a bull break of 280 and 292 to shift this momentum and give us the clear weekly higher low. The stop level would be down at 244, and we need the clear daily trend change. So at this point, we have the low, high of the bounce is 280, higher low did form at 250, and now a triple top at 280. If the bulls get the bull break of 280, that's the first indication the weekly higher low has been established, and we'll be looking for a move up at the next resistance to 3 psychological. Worth keeping an eye on for a tightening weekly range to form with little trading history. TRUL. So weekly time frame here. Consolidating on the weekly, we're looking for information. Have we formed our weekly higher low inside bar this previous week? So we're not confident just yet. We got the low of 1497, the high of 1656. Here's the bulls attempting a higher low compared to 1497, and then we need to change the trend by breaking 1659 to give us the higher low and higher high. That will give us the clear signal. Yes, our weekly higher low has been established, and we'll be making our way back up towards the $20 level, but we have to change the daily trend. And the first red flags, there's a couple red flags here. The first one being declining bull volume on the bounce, and it wasn't an impressive bounce for that reason, and now increasing bear volume on this pullback. So that's the opposite of what the bulls want. They want increasing bull volume on the way up, declining bear volume on the way down, and that's not what we've seen in the last 2 weeks of trading. So just keep that in mind. A little bit of a red flag there. CL, all-time high hit, but a lot of profit taking. Again, look at the 5 minutes. Clearly something went on at the end of the day. All-out dump volume was 109,000, and the total was, so that's over 20% of the day's entire volume in the last 5 minutes. Some of these U.S. names clearly seeing positions exit and some money shift around. And I would be curious to know if any of the names that saw the 5-minute end of the day dump in the US 7J sector were on the hedge fund, whatever it was, list that came out with all their data and research, because I doubt it they are. And that could be someone, hedge fund, whoever, exiting with the intention, again, it's all speculation, but it would be interesting to note if none of those names saw that end of the day dump. Let's see, GTII certainly did not. So there's a completely opposite reaction. And GTII was on that list, and IAN was on that list. Look at the 5-day last end of the day. That tells me that could be money shifting in response to that report, leaving companies that weren't on that report and moving into companies that were. Let's see if that follows through this coming week, and if those names that were on that report do stand out as more favorable. And again, I'll have to double check. Should have had the list of the names that were on there. I know IAN and GTII were. I believe HARV was as well, HARV, but we'll double check and see who's on that report for the next time we talk about USMJ. Hope you have a good rest of your weekend. Do some good things out there. We'll see you Monday. So we got a lot of pictures this time around. One of the highlights of the trip. So when I was at the Conundrum Hot Springs from last time around, people suggested going to Ice Lake Basin. And I said, sure, why not? I got nothing better to do. So headed that way, just some more campsites along the way, leaving some footprints and some towns. This is Ouray and Silverton that I was going past. Just some really cool small little towns nestled in the heart of some huge mountains with some really cool roads going through them. And there's so many pull-offs and so many views. It's hard to stay concentrated when you are new to Colorado and it's just these massive scenic views all around. There's some really cool colors on these mountains. Obviously, doesn't do it justice here, but different minerals eroding away, and red and yellow and brown and orange. There's another little cute town from above. So this is the hike up to Ice Lake Basin, and I was pretty beat up that day. I forget why. It wasn't too brutal of a hike. It was pretty steep. Had a big pack on, had a big water jug and all that. But I got to this point, which is pretty much there's 2 levels. There's one level up and then there's another one. And I saw tents over here and I thought, this is a nice spot, cool mountain, little lake. Maybe I'll just pitch my tent here for the night. And I said, no, I'll keep going up. It might be worth it. And it certainly was one of the best spots that I went to on the entire road trip, just in terms of, astounding beauty. And a fun aside is this has been the background of my computer for the last, I'm not lying, for the last 3 years. And my previous partner went over her house one day, and the background of her computer is pretty much this exact picture, but from maybe 50, 100 feet to the right and in the winter. Exact same place, and it was from her trip to Ice Lake Basin. So that was some pretty cool synergy. But there was a marmot who lived there, some nice wildflowers. The wildflowers were mind-blowing, as you can see. Just, again, so much more than I anticipated would be in a pretty arid environment that is Colorado, but just lush wildflowers at the right time of year. And this was the, surround sound or surround view, panoramic view all around. That's my favorite camping spot. Sweet picture. Did have a thunderstorm roll up out of nowhere. That's the danger. This is up over the tree line, over 11,000 feet up. I think it was somewhere around, I forget, between 11 and 12. But a storm came out of nowhere from behind this ridge and dropped a little bit of snow, a little bit of hail that very quickly melted. But just in terms of the speed that it came over with no warning, but you can't see the clouds on the other side. So that was definitely a wake-up call to be more attentive. This was a rock that a marmot lived under, and that's just his life. This is what he looks at every single day. The rock is pretty much right where I'm standing, and that was blowing my mind. That's just all he knows. That's outside for him. Pretty good luck out in terms of where that dude found to live. So this is now pretty much, I stayed for 2 days, and my agenda was, I wonder what this looks like from that mountaintop or that mountaintop. So this is me exploring right here, this little river that's feeding, or this creek feeding the runoff into this extremely mineral rich, that's why it's this color. Ice cold, did dive in, but you can only stay in there for, a minute or two. But ended up hiking up into that little crevice to see where it went. And there was some cool snow melting and some, again, the white rocks of the minerals running off of the mountains and some cool sculptures of snow. And that's one of the views from above. And you can see it's just valleys down there below. That's where you hike up. And that's the river that I climbed up. And then you can see it going down even further. That's where my picture was and where I put my tent up. And again, it's the kind of thing where I was alone in this place, the vast majority. There were 2 women that camped a bit further up. And other than that, I had this entire place to myself. This is from another peak. So that last picture was from up here. And then this is from a completely different angle. And it's a good spot. You should go to Ice Lake Basin in Colorado. And that's the view back down the valley from where we hiked up, where I hiked up. And I had something, I got all poetic up there. And I do a thing where I associate music with memories. So I have a really good memory in terms of memorizing things in school and memorizing lyrics of songs. So what I'll do is I'll be in a moment and I'll suck in that moment as much as I can while I'm playing music. And I associate that memory and the sense and all my senses with that song. And so for this song, or for this memory, I was sitting up there at sunset and I was playing Fool on the Hill. And so now anytime that I hear Fool on the Hill by the Beatles, I'm taken right back to this spot. And it's a very vivid memory for me. And I do that with a lot of songs and a lot of places that I go. So potentially something you can play with yourself, but it's really good for memory recognition for me to have an audio trigger almost to bring me back into that moment. I got poetic and I wrote something about religion, and I'll see if I can find it. I'll be right back. I can't find it, but I recreated it for this post a while ago. Some of the similar themes. Anyways, that's that. That's Ice Lake Basin, Colorado. Go to it. And we'll see you tomorrow.